Good day, everybody. How you doing? Nice to see you from South Africa. You know, I heard my tea with the Queen tomorrow might be canceled due to the funeral for the Duke of Westminster. But I understand. That's cool. Family comes first, right? Catch you next time, Liz. Anyways, hey, let me remind you, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay calm, stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. How you doing, huh? Do these strategy sessions every day, 7:30 in the morning, Monday through Friday, New York time, which is approximately London lunch. The overriding goal of helping you put together trade plans for the upcoming session, review what has happened, discuss the good, the bad, and the ugly of the markets. Volume is low, huh? Let's see if I can help that. Hang on. Thank you. Un momento, por favor. In sooth, I know not why I am so sad. Does that help? Practically. Sound better? Every Friday except for tomorrow, I also speak at fxstreet.com, where I'm also, out of the, 100 Forex speakers that they have there, I am Forex Speaker of the Year, which is nice. You can't be in the lower 95%, right? So anyways, I'm here to share my experiences, the good, the bad, and the ugly, with my overriding goal of making you a success. And what are you going to do when you are a successful Forex trader because of these sessions, or maybe partially because of the sessions you attend with me? Ben, I'm living in a hut in Africa. I ate impala for dinner. And zebra, actually, the zebra is actually pretty good. Yeah, but it's nothing like the one in Dubai. Yeah. No, actually, you know, the zebra is actually pretty good. Yeah. And actually, they made these little sausages out of something called an elan or nila, or, you know, it's sort of like a gazelle type thing. They made a sausage out of it. It was ripper good. It was really good. Yeah. So anyways, what are you going to do once you become a successful Forex trader? If I helped you achieve that success in any way, you're going to go to tradersway.com and open up a live account, fund it with money when you feel comfortable that you're ready to start your career. Traders Way would like to be your prime brokerage for your successful Forex trading business. And they would like to work with you for many, many years to come, because I help you develop skills like patience and discipline. Does that sound good? Yeah, I had a great time in South Africa. It's great. Wonderful place. I don't remember what it was, Catherine. I had a lot of food, you know, one after another. But I said, did he say it's an elan? And then he said, no, it's something else. And it's hard with the accents and stuff. And I'm like, so what is it? And he's like, well, it's kind of like thing. It's got like horns, and but it's smaller, and it's like a gazelle, but it's not a gazelle. Something, and elan, elo, I don't know, something like that. So I'm like, yeah, I'll eat it. Yeah, sure, I'll eat that. Boom. That was good. That was really nice. Yeah, I don't know. I don't know. No, it was a nice place. Anyways, let's get going, yo. I don't have a lot of time. I got to get on the plane and go meet the queen. So, how are the charts? You see the charts okay? Oh, yeah. The ostrich and croc. I'm from Georgia, man. We eat alligator like twice a week. But ostrich, not bad. But I've had ostrich a million times too. I think you can see the charts. I had to really squeeze the chat so that I can fit it on this chart. This computer is only at 1080p. The laptop that didn't work yesterday is a 2K laptop, and I think it was another Adobe Air issue. Just it can't do it. I don't know with the slow internet and all that. So I'm assuming you can see everything. I want to. Do you want to talk about the Kiwi? Life is great. Life is grand. Life is mediocre most of the time. Okay. So the value of the New Zealand dollar skyrocketed. What happened? You should be a power trader at this point. It's supposed to go down, right? Do you remember talking about the Australian dollar? Australia cut interest rates recently, and the Australian dollar gained value. Roger, I'm just an analyst, dude. Give him a call. Look, why should if Trader's Way is pulling the indices, it's because you weren't paying for it. You weren't trading it. You weren't using it. You're just staring at it, but someone had to pay for it. You know what I mean? So if they're pulling it because nobody used it, then you should have used it. That's all. Nothing in life is free, bro. But yeah, that's too bad. So, anyways, yeah, Australia recently cut interest rates, and the market interpreted their statement after as saying that that's no more. It looks like the market participated, or the market participants interpreted the same news. New Zealand cut interest rates, the New Zealand dollar went up. So I got a lot of questions. What does it mean to be priced in? Well, people already shorted the Kiwi in anticipation of New Zealand cutting interest rates. So they already made the money. And then they found out there's probably no more. And so, it rallied instead of fell because they already had sold it. So it also points out to the fact that it's not the news. News is not fundamentals. That's all. Okay. So fundamentals is about analyzing news, the trend in news, and anticipating how the central bank will react to the news because they have a mandate. Or like in the Fed, they have a dual mandate to make sure that the economy is healthy and to make sure that inflation is in check. So when you look at the news, it's not like, was that good or bad? No, is it good or bad in context of the existing trend, and will that trend influence the central bank to make a change in their policy to impact either, like in the United States, the economy or inflation? So you raise interest rates to slow down the economy. You lower interest rates to spur the economy. Okay? Yeah, there's still a differential, it's just less and less and less. So you know how banks are complaining that they can't make money in this environment? Low interest, zero interest rate, or negative interest rate. Well, foreign exchange traders are like that too. They're like, I can barely make 1% on my carry trades. Well, banks banks by and large make money on the spread. You go to your bank, you're like, hey, bank, I need $1 million. I need to buy something. And they're like, all right, we'll lend you the money. You have to give us some collateral. And you say, okay, I'm going to buy a house. I'll give you the house as collateral. All right. And then what? The bank gets the money from somewhere, like the interbank market. The interbank market says, you're going to have to pay us 1%. They're like, cool, that's good. Then they go to the client. You're going to have to pay us 3% on the million. Plus, put up your house as collateral. Okay? And they make money. They borrowed the cash short. They're long on your mortgage, right? On the real estate, right? So they're long the commodity, they're short the cash. It's just a trade. But what if there isn't a spread between the cost of their borrowing and what they can collect on lending? You see what I mean? Well, we're kind of the same now. There's still an interest rate differential, but I remember collecting 8.5% on Kiwi. So like 1.5% doesn't sound that good. So anyways. So what's your next plan? Could have been pretty easy, I think. Okay, let me ask you, is it a coincidence that this pullback is exactly 61.8%? Yeah, probably not. Good answer. Versus, saying yes. I was going to just say yes, but probably not. Like, we don't know, right? But you should have a plan at this point. Are you going to buy it or not? So this idea like interest rates were cut, blah blah blah. Who cares? Yes, it's supposed to go up, but we never know. In fact, I was talking to someone after one of the seminars. She asked, about the New Zealand interest rate cut specifically. And we talked about, yeah, if they cut it, probably will go down. If they don't cut, it'll probably go up. And she said, and then I'm like, whoa, no, probably. We don't know. It may not be that way. There are other things that are also important, like what is the next decision? And we discussed that. So you would think when the central bank cuts interest rates, it should go down, right? Makes sense that it should go down, but it doesn't have to. And that's why you wait for evidence and stuff, right? So in this case, it went up. So why? So next trade, right? Anybody like to dwell? Let's dwell about this for 2 weeks, right? Tell you what, I dwelled about the Swiss National Bank for probably 6 months, right? So it happens, but what are you supposed to do? Higher, high, higher, low. What would a computer do, right? There is a higher high. Wait for the pullback. Yeah, the 3-second rule, right? And then buy it there. What? And then what? Keep doing that until that stops working. So how about this one? You fib that? Life is great. So this is a 618 and that's a 618. Cool. And what about markets? Are markets always all bullish? Are markets always all bearish? Life is great. Life is great. Life is good. All arrows. Arrow. Okay. So could you still be a bear? Could you still say New Zealand needed to cut interest rates? There's something wrong in the economy. Therefore, I am still going to sell at resistance? Or are you just going to swallow the bait whole, like a, like a salmon, like a swordfish with a hook in his mouth. Is it possible that a bear thinks the weekly R1 is resistance? Is it possible? Good. So my advice to seminar people is like, if you think it's going to go down, identify 2 or 3 levels of resistance in which you may want. And then we talked yesterday, even if it goes up, and my example was because they don't cut interest rates, but you're still a bear, right? You still sell at your levels of resistance. But if it does turn bullish, because let's say they don't cut interest rates and now you know they're done their policy, then you use your old levels as a support, right? So if you're a bull, this and this level where it was obvious resistance, and if you're a bear, here and here are still levels of resistance. They were yesterday, they were the day before, they were the day before that, right? It's not like it just became resistance. So if you're a bear, right, you should say, wow, look at them. They cut interest rates and went up. What a bunch of idiots. What kind of moron would buy that, right? Shouldn't it be what you say, or at least what you think? What kind of moron would buy that? Losers, right? And you're like, where's the next level of resistance? Oh yeah, obviously weekly R1, right? What does the R in weekly R1 stand for? It's weekly resistance. Where else is it going to be? And then way up here, right? So you could take a shot in there on a smaller time frame, jam a stop and take a walk. But let's say now, what if you're still a bear? Life is grand. Life is great. Life is good. Okay, you see that a little better? Now let's go one more. Nice, right? What do you do with the simple idea that this low this low is lower? Wish I could just copy and paste that. Would you say the low on the right? Okay. Would you say that low is lower than that old high? Could you say we broke through support? What do you do in a scenario like that? You're bear and it made a lower low. What is followed up by a lower low when you're a bear? I'll go ahead and wait for your answer. Yeah, because the thing is, I already know, right? So let's make sure you guys are thinking. By the way, it's really good to see you. It feels like a million yesterday, and I couldn't do it the day before, and the day before that I was busy, and then I've been traveling. Right? You guys make me homesick, but like my home is here with you, like in the webinar, right? The webinar is my home. Yeah, it's good to see you. What's going on, Adam? Winter finally came for you, huh? That's good. All right, so you fibbed this sucker, right? You see? Do you think that's a coincidence that this is a 618 of the drop? Yeah, you get it? So, where do people lose money? Is that an extreme close-up? I see you. Yeah. Um, where people lose money is because they don't know if they're a bull or a bear. And you're like, oh, it's up now, so I must. I mean, it's funny, right? Funny like a clown, right? Funny how? If you stay your course, if you say I'm a bull or a bear, and it spikes like this as a bear, you could like at least back off and say, whoa, 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 I might be wrong here, right? Things might have changed, right? You see? But doesn't mean it has changed. Has it changed in this time frame? Look, it spiked up. So what? Don't be a gullible bull. Don't be a nincompoop, right? It hasn't changed. So what I'm saying is, if you're a bull, you can find your buy zones, and you could use fibs because you're expecting lower lows and lower highs. You're expecting support to hold, and you're targeting resistance, right? Flip that around. If you're a bear, you're expecting lower lows and lower highs, and you're expecting resistance to hold. New Zealand cut interest rates and went up. I understand that's confusing. You lost money, and it's okay if you did. But when you look at it now, if you were a bull, you would have made money. If you were a bear, you would have made money. So who lost money? People looking at their charts for answers. True, Miles. True. But the thing is, if you think that's the end of interest rate cuts in New Zealand, then the current lowest low is a floor. So that's your bottom. If they don't cut interest rates lower than that, then that is the bottom. And you could maybe hold this New Zealand dollar if you're a bull forever. You could, as long as it doesn't knock you out of break even, right? And if you held a 10-year bond from New Zealand, let's say you went to New Zealand today and you bought a 10-year bond, what does that pay? 2%? Great. So 5 years from now, interest rates, let's say short-term interest rates are 3%, which means the 10 years probably paying 5%. Are you getting paid more on your 10-year bond? Interest rates went up. No, your bond is fixed. It's like a mortgage, a fixed mortgage. Fixed mortgage for your house at 3%, which you can get these days, I think 3.5% you can get. And 15 years from now, interest rates are 5%. You don't have to pay 5%, you pay 3%. Okay? So a bond is a fixed contract. If you're a currency trader and you buy it and it goes from 1.5 to 3%, you make more income. You get a raise, and you didn't do anything except you bought it way down here at the floor, right? Oh yeah. You might be up 3,000 pips too. Yeah, that's cool. Right on. But now you're clearing 300% annually on interest payments instead of only 150%, which would be pathetic, right? Oh, I only make 150% on the interest? What's wrong with you? 300% is a lot better, right? So that's kind of how you could look at it. If you think the worst of the economy, or how about this? You're going to lend a business or maybe a relative, right? If you think the worst is over, and let's say the small business has, let's say it's like maybe your cousin's business, I don't know, and your cousin's gotten through the hard startup years, Your cousin's got a couple of really good clients and income is coming in and steady, and you talk to them and there's some deals in the works. You know, next couple of years really could be expansion years. Not bad, right? Not bad, cuz. And he says, hey, Wayne, I need to borrow like 100 grand because I need to, staff up. I got to get ready for all this new business and we got to move. And, I'm just short on cash, but opportunity. Boom, give him money, right? Well, what if that small business is New Zealand? So, like, what do you do, New Zealand? Oh, well, we got pretty ladies. We got lots of tourists like to come here and like jet boat and surf, and we make Hobbit movies, and people want to come and like drink beer in a shire like a bunch of idiots, right? We got dairy, we got mutton. Yeah, we got stuff going on. Yeah, and you know what? Dairy prices might go up over the next few years because they're at horribly low level now. So we're expecting maybe 5% year increase in prices in dairy as the global market picks up. You're like, you know what, New Zealand? That sounds pretty good. I know you had a tough stretch here, but I'll lend you some money. Here you go. The cool thing is it's not a bond because we're in the cash market. We're foreign exchange traders. We can do the exact same thing a bond trader does, but if a bond trader lends New Zealand money, it's a fixed payment for a fixed amount of time. We can add more money if we want, right? As things get better, and we can get paid interest every day, not twice a year. Every day we collect interest. And if interest rates go up from the Reserve Bank of New Zealand, we get a raise. And the value of our loan in pips will appreciate because we own this debt is in New Zealand dollars. And they're going to pay us back in New Zealand dollars. But by the time we cash out and get all our money back, the New Zealand dollar is worth a lot more. So we're actually lending cheap money. We're going to get paid back more expensive money, which is good, right? It goes in a Timex and it comes out a Rolex. Nice. So anyways, so Miles says, why not just hold on? Yeah, well, why don't you buy it, jam your stop at break even when you can, and make the judgment call? Wouldn't it just be fun, Miles? I've been holding on to this Kiwi yen, and it's still open. I've had it for years. I have cigars in my humidor for like 8 years, 9 years. I have wine in my basement that I've had for like 22 years. I bought the very first Cabernet from Napa, considered a cult wine. It's beautiful. I think it's like a 1992 Beringer Reserve. Oh, 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 oh. You know your wine, say what? They're rare even at auction, right? So have a little patience. Or not. Hoarder. You should see I walk around, I throw stuff away all the time. Ah, throw it away. Get rid of it. Right? That's funny, right? Is it like cake? I don't know. Yeah. I don't know. Do we have any wine people here? Any winos? Yeah, let me tell you, 1992 Beringer Reserve Cab from Napa Valley. That is some wine, right? So, anyways, it got a little distracted there, but yes, the spread is narrow, but maybe it will expand over time. It might take years and years and years and years, but wouldn't it be just great bragging rights to have this for 10 years? I've saved stuff for 10 years and then enjoy it. There's a certain satisfaction, right? But on the other side, do you have to suddenly go from being a bear to a bull? Is the market always correct? No, of course not. So if you were bear here and they got the cut and it didn't happen, okay, you got knocked out. So what? What's the next level of resistance? Weekly R1. Well, it went up to resistance and stopped. If you were a bear, you could have sold. How about this? I want to make sure you guys see these things because I see them and then I forget. Maybe you don't see them. Maybe it's not obvious, right? What do we call that? I can drop into a smaller time to think. Okay. That's one trade, right? But what's the more conservative way to trade a double top that I've trained you? I've trained some of you guys for 4 or 5 or 6 years, right? Double top is tradable. What's the more conservative entry? Fib the drop, right? Some of you guys might be relatively new here, so let's, okay, so that's the sweet spot, right? That's what I call it, right? How many times have you seen that setup where I show you a double top at resistance that drops like a ton of bricks? You fib it, you find your sweet spot on the retracement, and you sell somewhere between the 382 and 1/8 Fibonacci retracement. How many times? 1, 5, 20, hundreds, right? Right down, like not a joke, right? Like seriously. Like when I've only been here 4 years and I've seen it 327 times, so I have it written in my journal, right? Just to make sure it's clear, let's get rid of this. Okay. Right? Okay. And then lower low. What? So now we got to fib this, right? Okay. Probably do it that way, just to be clear. Okay. So now I got a new sweet spot, 382 to 618 Fibonacci retracement. Falls again, right? And now on a macro time frame, let's see what the hourly guys do. Life's great, life is grand, life is good. Okay. Where's the sweet spot? Yeah, it's really sad. This one wasn't as perfect. It's really sad. It's really sad, really tragic. But a bear is thinking that, right? Oh, you know what? Actually, it's probably off of this, anyways. Oh, yeah, it's perfect. Oh, yeah, good. So the sweet spot, hang on. I just didn't measure it properly. I can't get my leaps. There we go. So it is actually perfect. So I think we had like, what is that on this chart? Did I find like 5 different 618 Fibonacci retracements? I think it was 2 going up and 3 coming down on 5, 15-minute and hourly time frames. Yeah. No, not cake bread. Behringer. Yeah. The wine I bought was never sold in a store. Yeah, no, because I realized I didn't actually take it off the top, and someone on the hourly chart would be looking at slightly different information. They wouldn't fib it off that other one. Double top, lower low, lower high occurred on a 15-minute chart or a 5-minute chart, but someone looking at it from a different point of view, right? So, like, it's relative. Do you know where that comes from? Like Einstein, for example, quantum physics. Okay, you're on a asteroid floating through space. You're going in a certain direction at a certain velocity, and another and a spaceship is coming to you from a different angle at a different velocity. And yet you're both looking at the sun. And you say, well, what time is it? Well, that depends. Or, that kind of stuff. Like, it's all relevant to the observer, right? So anyways, based on this point of view, if you're on the asteroid and you're looking at your space, in this case, time price continuum, your point of view is, okay, it topped out there, made a lower low relative to the low Fibit, somewhere between the 618 and 382. I'm going to sell it. It went up to the 618 and dropped. But if you're on the spaceship, you look at it and you're like, oh, double top, lower low, lower high, low, lower high, lower low, lower high. But it's the same price time continuum, right? Price is on the right, time is on the left or on the bottom. Okay? And this is why you're doomed if you're chasing price and you're asking the chart to tell you what to do. You're doomed. So that's why I say flip a coin. I don't care. Flip a coin. At least you know which one you're going to do. If you lost like 6 or 7 trades in here because you were buying and then you bought and then you bought and then you bought and you lost big time, so then you sold and then you sold and then you sold and then you started buying it again, but you're just all over. You're a complete mess, right? So there are bulls and there are bears. What else are there? There's one other animal. Bulls, bears, and pigs. And pigs get slaughtered. So if you wake up in the morning and you're booting your computer and you don't know if you're a bull or a bear, you're a pig. And you're going to get slaughtered. Welcome to the market. You're going to get punished. Okay? Yeah. Welcome to the jungle. Yeah. So if you don't mind, I'd like to end this webinar early. I know it's only been a few minutes and stuff, but I did want to be here for you. And I did want to go through some of these things. But hopefully I warmed you up. Did you miss this kind of stuff? Does this feel good? The webinar feels good to me. I really like getting into trading with you guys. Yeah, I miss you guys. So I'll be back in the office on Monday, just a regular Monday, and I'm going to go through the weekly pivots with you. Swing trades on Monday. What do you stink? Smell like a plan? Cool. Cool. I'm looking forward to, guys. Just want to know that you're important. So I'm here for you. I'll get back home soon and we'll get on to the next. We'll get back to work, huh? So peace on earth. May the pips be with you. May your profits be above average. See you again soon, huh? Take care, mate.